Hello, welcome to the Charity Impact Podcast, the in-depth podcast for people working in the charity sector or more broadly to achieve social impact or social change. Please do follow us on your podcast player and Twitter, LinkedIn or Facebook. I'm your host, Alex Blake. When I'm not podcasting, I work as a consultant helping charities to increase their income and impact. Today I'm joined by Nick Temple, CEO of the social investment business. So if you're interested in social investment for your charity or social enterprise, or if you're just looking for some insight into the current social investment market, as I was, then this episode is for you. Nick has been CEO of the social investment business since 2018 and has previously been Deputy CEO at Social Enterprise UK and Director of Policy and Comms at the School for Social Entrepreneurs. Nick's on the board of Social Value UK, the UK National Advisory Board for Impact Investing, Charity Bank's Social Sector Advisory Panel, Big Issue Investment Committee and the Diversity Forum for Social Investment. So all of the social investment and social enterprise things covered off, which is what we're going to be talking about today. Welcome to the podcast, Nick. So I thought we better start off just with a bit of introduction to social investment for people that are sort of less familiar with it. And then if we briefly cover that off, then we'll get into the detail a bit more.
Yeah, I mean, I guess there's two sort of different angles to social investment. One is, it's investment. So I guess the main difference from what we're used to in the charity sector is that it's expected to be paid back, sometimes with a bit more of interest. And it differs, I guess, from mainstream investment in that it has a social purpose. So, to give you an example, a social investment business, we're a charity. Our mission is to kind of reduce inequality and get a fairer society and use finance and support to do that. So we're interested in using investment as a vehicle to do that, so we can reuse it over and over again. But we're interested in the social impact of that investment as well. But really, it's very, most social investment in our sector is lending, which lots of people are very familiar with from their mortgages if they're lucky/unlucky enough to have one.
And yeah, we'll talk about some of the different types of kind of products that are out there now. But one of the things I wanted to hear from you was a little bit of context of how things have developed over time. I mean, I imagine social investment has existed in one form or another for a very long time. I know social investment business has been around for 20 years or so. But I remember about 10 years or so ago, social investment being talked up a lot by government and policymakers, and at that time a fair amount of kind of money being put into promote sort of new organisations and promoting it as and I suppose it being talked up quite a lot as kind of it was going to save the charity sector's financial woes and all that sort of stuff. And it feels like that rhetoric kind of died away a bit over the last few years, but there's still lots of activity, lots of things going on. So, and that's all just from my perspective, not really working in that part of the sector specifically. So yeah, it'd just be interesting to hear from you, being in the midst of it, what your thoughts are on kind of how things have changed and developed over the last, say, 10, 15 years or so.
And you're right to say it goes way back. I mean, I think you can trace this sort of stuff back a bit to sort of, depends how far you want to go. You can certainly go back to cooperatives in 1840. I think one of my colleagues always refers back to medieval guilds as the start of social investment. But anyway, more recently, we started in about 2002, and we started with something called the Adventure Capital Fund, which I think was very well named, which really lent money to organisations that the banks wouldn't really, often community-based organisations in the most deprived areas of the UK. I think there was us and maybe half a dozen others that were doing it in any sort of meaningful way at that point. But you're right to say around sort of 2011, 2012, particularly around Big Society Capital being launched. So they got 400 million of dormant asset money and 200 million from the Merlin banks. To kind of be a wholesaler really for the social investment market. So to put money through people like us out to charities and social enterprises. And I think you're also right. I would kind of agree with your characterization of the slight hype and rhetoric spike there was around that period. I mean, I think many of us involved in it were not behind the hype necessarily, and kind of but it was presented a little bit like a sort of silver bullet or a panacea, or it was going to solve everything. I think we're in a better place now, where I think most organizations know that they've got to run a sustainable model. Their income can come from lots of sources. And social investment is one of the tools that's out there that can hopefully help them either sustain their activities or grow them or thrive. And there's more providers now. So I think there's a fuller range of both products and amounts, and the whole sort of landscape feels a bit more mature from our perspective than it certainly did 10 years ago and definitely 20 years ago. The statistics would tell you that there's more social investment happening. It's going out to more organizations. I think an important development was the Access Foundation, which is kind of Big Society Capital's sister organization. They got established, and they were created with money that was a bit more flexible. And so they've been able particularly to do the right sort of finance for smaller organizations in smaller deal sizes as well. And that's made a big difference, I think. I think we still, though, there's still room for improvement, inevitably, isn't there, everywhere? I think particularly, as with other parts of the charitable sector, Black and minority-led organisations have often found it more difficult to access finance or at the right stages. I think sometimes the products or the way they're managed don't always match how organisations in our sector run and what they quite need as well. So I would say a sort of qualified success in the growth of that and the maturity of that landscape, but still with some things to address and improve upon to make it better still.
Yeah, and I saw recently you guys are involved in a new sort of fund, aren't you? That's targeted Black and minority-led organisations. Is it Create Equity?
So we've got a loan fund called the Recovery Loan Fund, and we've been successful to get money, to get grant actually from Access, who I just mentioned, to put alongside that. And it's specifically for Black and minority-led organisations. And that's because, as I just described, they've been underinvested in historically. And this is really about putting grant alongside the loan to get them up more to where their peers are. So really focusing on kind of getting an investment into them that's to use the terminology, blended, so grant alongside loan. Just to make it work, because actually if we just went for loan with them, they may not be able to access it. They might not be as financially strong or might not have the track record and so on. So we can put some support around them with working with the likes of Create Equity. We can find them also working with the likes of Create Equity, who are more knowledgeable and have better networks. And then we can put just a better package of money together for them at the stage of what they're at. So yeah, that's one way, and we're trying to improve on our processes and our track record as well by working with partners and trying to make the money as flexible as it can be.
Yeah. In terms of those sort of types of investment product, there's kind of more available now than there were a little while ago. Could you give us an overview of what those are? I think maybe it might be useful just to cover off some of the sort of the main product or the main sort of types of product, rather than going through each and every one of them, because I think there's quite a few variations, isn't there?
And I might lose people if I go down a technical rabbit hole, probably. But I mean, I think the standard one is debt, so it's a loan. I think most people are familiar with those. Generally in our sector, that's either literally like a mortgage secured against a building, or it's unsecured, so it's not secured against anything. It's just for cash flows or working capital or development capital, whatever it might be. And those loan lengths can vary, obviously, just like any loan can. I think we tend to see equity as more your sort of Dragon's Den. I'll give you 50 grand for 10% of the company type of deal. We see less of that in the social sector, just because most of the legal structures don't really have shares. Obviously, we're not generally shareholder owned. But sometimes you get products that are kind of developed to act a bit like equity. So that if you ever hear the term quasi-equity, that is what that's referring to. And sometimes you get deals that are more about, they change depending on how your profit is going, or sometimes how your social impact is going. So you can have effectively investment that's tied to your performance in one way or another as well. The other major one I think we would look at is increasingly we've seen some that are getting their investment from the crowd in one way or another. So that can be through different platforms or community share offers. So you see quite a few cooperatives raising money through community shares and genuinely sort of being owned, whether that's a wind turbine or a local newspaper, really using community shares as part of the way to do that as well. So a wide variety. I mean, I'm only touching on a few, but those are the kind of main types we see coming through in terms of what we do.
And how do those work, the sort of community sort of crowdfunding approaches? Because I've seen it done by charities fundraising, and straightforward, it's a donation, and I've seen it done by companies as startups, and then it is equity, and you're getting a tiny slice of the company. So how does it work where it's neither of those things?
So literally community shares, mostly it's a cooperative. So normally it's an independent industrial and providence society, to get into my cooperative legal structures, or a community benefit society. And they can actually give shares. So they're able to give shares. So you do literally own a share. Now, generally, people aren't looking for an enormous financial return from those investments. But it gives them so often it's giving them, it's as much about the ownership, i.e. they can go to an AGM and they are a shareholder of, the wind turbine or the local newspaper or whatever it might be.
Yeah. So presumably there are some voting rights, which are more important than potential financial return.
Yeah, often. And, but it's a different way also of raising money. All the other products I mentioned tend to come through an intermediary like us, or some sort of fund or manager or bank. And this is a way of going direct to your community, which for a lot of charities and social enterprises, obviously they're often rooted in that community. So it makes a lot of sense, just as fundraising from that community makes sense as well. So sometimes there's other ones where you can raise money and they're sort of collectively pooling it into a particular product. But so there's different ways of approaching it. But we've started to see that methodology grow, particularly in the last 5 to 10 years, really.
Okay. Are there particular platforms for those sort of crowdfunding projects? 3
spring to mind. So there's ETHEX, ETHEX, which is an ethical exchange, as the name would suggest. So that's a platform where there's lots of different offers from all over the country. You have Triodos have their own crowdfunding platform, which is doing more sort of charitable bonds. So quite big charities raising money on there and they're less about a specific geographical community, but more about raising money from as wide a group as possible. And then the Community Shares Unit and the Community Shares Booster Programme, which is sort of allied to Cooperatives UK, they obviously drive a lot of the community shares work and support a lot of those community share offers as well. So those would be the 3 that spring to mind with a particular social motivation.
Yeah, cool. I'll have to check those out. I've not kind of explored that before.
I should say, I feel like I should say something like money at risk. This is just to be clear.
This is not financial advice.
You can do the voiceover later if the disclaimer.
This is absolutely. This is definitely not how to get rich quick. Or at all, most probably, but potentially somewhere that you can invest for a good social return and, in some cases, a modest financial return. And there have been some, if a pretty small number, I guess, of sort of products that have gone onto the public markets. In terms, probably not lots of them. I don't know if is that because it's like the difficulty of doing it, or is it just not really, has it not taken off, or is that just me not seeing them?
It's partly the difficulty. I mean, I think it's also partly because with a lot of social investment, they're very patient and they're very people centered, and so there tends to not always be a clear exit in the same way that there is with some of those companies. So it doesn't always doesn't always fit with the ethos maybe of a stock exchange. So you do see things like retail charity bonds now going on the market, and also Big Society Capital have developed their own trust with Schroders, which they've done together, which has a sort of 100 million that they've raised. I thought maybe it's about 90 million at the moment, they've raised from the public markets. And again, that flows through into other social investors. So you're starting to see different vehicles emerge over time. But yeah, often it's not always the right sort of money or with the right sorts of time horizons, I guess, for some of the work we're doing. Interesting, but for a long time, if you did have any money to save, you haven't really been able to earn much money on it. So actually, you might as well have had, my dream was always you could, why not have a social and ethical ISA that you could pop your money into that's funding these sorts of projects? Because actually the return they can give you is probably not far off what you're getting from your standard products anyway. So I think we'll see much more of that, whether it's your pension, savings, investments and other routes to market that start to include these social and ethical and environmental options, hopefully.
Yeah, I mean, I guess in terms of those public markets, there's been a real sort of boom in the ESG products, hasn't there? But they're not quite the same thing. But so it'd be nice to see more of the kind of the products that have more of a social return kind of taken a place, because obviously that's where the sort of big money, the big investment would be, wouldn't it, if it was in that kind of space?
Absolutely, and I think we're constantly thinking of different ways. Like you say, we want to get that money flowing down to the real, what we think of as sort of real deep social impact that we're having with the projects we support. But some of the stuff a bit along the spectrum, calling itself ESG, or in some cases calling itself impact investment, is not always what we would hope for, I think, in terms of the sort of integrity it has and the intentionality it has and how it reports against that as well. So I think that's a very emerging field. And I think, again, we'll see more coming through of like people being held to account for that, people being scrutinized for that. You're already starting to see that much more. And I think that will only increase and standards will start to emerge.
Hi, please excuse this brief interruption. I'd love for more people in our sector to hear from our guests. So I'd like to ask a favour of you, please. If you're enjoying the podcast, please could you promote the show in whatever way suits you? This could be giving us a rating and following us on your podcast player, or following us and sharing posts on social media, or telling your contacts about us by email. Any of those would be a great help and greatly appreciated. And most importantly, thank you for listening. Okay, so we've talked about the types of products available a bit, and it'd be great to get an idea of what your sort of portfolio looks like. So, like, is it pretty much all social enterprises, or is it charities and other types? And what are some of the investment needs that are being met? What are some of the kind of projects that are being enabled, or is it not necessarily projects, but kind of cash flow and things like that? It'd be great to hear like some examples of that, and just to get a bit of a sense of what organisations can do with social investment.
No, great. And it's a real mix, is the honest answer, Alex, in terms of the mix of organisations. So it's definitely a wide range of charities as well as social enterprises, and the mix of what they use it for is there as well. So some are definitely using it to invest to grow, either in more people or in a new system or in new branches of their organisation. There are people who are using it, as you say, to sort of, if you like, manage the cash flow of different contracts where they know they're going to get paid, but they're not getting paid yet. So bridging loans, different ways to manage the money better. And some obviously seeking to buy buildings or assets of different types, or vans, or whatever it might be. So quite a wide range of stuff. I mean, some of the things we did in COVID, we particularly did a lot of those kind of effectively emergency sort of bridging loans, which were helping people through until they could open again, actually. So we had museums and theatres and community leisure centres, which are now under pressure for a different reason, coming to us for loans that helped them get through a period until they could open up and really start to earn and trade again. Similarly, we recently lent money to an air ambulance, which is kind of completely refurbishing its headquarters, and wanting to do that and build that for the future. And then a different one, one we're seeing next week, actually, one called Change Please, which is a social enterprise that uses coffee as the route to reducing homelessness, which probably isn't the first idea that you might come up with, but basically they train people up as baristas, wrap housing and support around them, get them into work, and then sell coffee, and also create sell that coffee inside companies as well, and inside gyms and so on. And they had opportunities to buy some retail outlets during COVID, so they were quite ambitious and aggressive in wanting to scale their operations, and we lent them some money for that as well. So a really wide range across mental health, physical health, housing, homelessness, environmental, education, training, all the full range of the sector really we see coming through our doors. And yeah, we see it as our job just to kind of try and provide what one of my peers calls the sort of the right money at the right time. And if we can get that right, then hopefully it helps them fly and do what they're best placed to do as well.
And are there common features of the sort of investable organisations, for example? Is it that, are they nearly always having trading income as part of their income mix, or contracts? So, if it's a sort of local community charity that completely relies on fundraising from like events and donations and maybe some grant funding and stuff, I suppose for those types of organisations, there's obviously a question around like how would you repay that kind of loan. So are there typical kind of features of what your sort of investees look like?
Yeah, absolutely. Like the reality is that if they've got to pay the money back, so they really need to be at least have a decent proportion of their income that's usually trading in one way or another. I mean, sometimes a charity, even a local community one, might own a building that it's planning to sell off, or do you know what I mean? Yeah. So there are other options to getting it, but generally, yes, if you've got to pay back the money, you've got to earn it from somewhere, and you've got to be confident that if you're borrowing 100,000 to employ 2-3 new members of your team, that they will deliver at least that back over time to pay it back. But as you know, across the sector, there's such a wide array of business models. So some are in public service delivery, some are running retail and are open to the general public. Others are working with central government, with corporates and businesses. So it varies wildly in terms of what we see. I think the other bits we tend to look for are strength of the team, both internally but also on the board. So we don't expect everyone to have done investment before, obviously, but can they manage this, and perhaps we can have some confidence that the numbers are going to be there and it stacks up. And also just an understanding of their context and the market they operate in. I think, again, no one's asking anyone to sort of realistically do 5-year cash flow predictions out into the current environment, because no one has an idea what's happening 5 months from now, probably, never mind five years. But do they understand their market quite well? Are they well placed to win new business, to have repeat business with their current customers? Do they understand how their world's evolving as well? We're never going to be the specialists in social care or recycling or refurbishing furniture or whatever it might be, but we sort of have some expectation that they understand their world quite well, and that gives us confidence again to invest that even though lots of things will happen, they can navigate through it and have got the right people and the right information and knowledge really to do that.
Yeah, and presumably, although there's a lot of uncertainty, they need to have the business plan in place with projections that are based on a strong rationale and all of those kind of things.
Yeah, we see the occasional set of projections that are based less on reality. And look, we're all optimistic about our organizations. I think there's nothing wrong with that, but I think, yeah, it's our job to kind of go, really just test that a little bit. But yeah, that's exactly right. We want some sort of sense that they know where they're going. We're not expecting everyone to have every single thing nailed down, because that's just not realistic. But yeah, a decent plan, a decent sense of the structure and the team, and a sense from our perspective of the viability that the money is going to come back.
Yeah. Do you know off the top of your head, how does it compare, the sort of number of social investments that fail and they're not able to pay it back compared to commercial loans or kind of business loans, whatever the sort of comparable would be?
Yeah, I mean, the honest answer is it will depend really widely.
It depends
on the type of fund. So for example, like mortgages carry much less risk because, if someone or an organisation can't pay, you can just sell the building.
Yeah, I suppose is there a comparable you can do just in terms of the sort of maybe the sort of debt area, just kind of commercial loans that are not maybe unsecured loans?
I think we perform pretty well. I mean, so on one of our old historical funds, Future Builders, which was 150 million pounds, it was 125 million loan and 25 million grant, so similar to what we were talking about earlier. Well over 100 million of that is already paid back to government. The sort of write-off rate, which is sort of what you're getting at, is
okay. I couldn't remember the right terminology then as the question came to me.
I'm not an investment person by background, but it's around 15% on that fund, which was kind of within the original KPI we were set by government way back when was 25%. So we're performing quite above that, and I think then it depends fund by fund a bit. If we're because sometimes we'll be deliberately taking quite a lot of risk, and almost it would be wrong if we weren't. If we had fewer write-offs, do you know what I mean? Our appetite might not be wrong. I think the thing for us, it more than just writing off the investment is are we strengthening the organisation that the money's going to? So I think what we don't want to ever be doing is putting the organisation itself at risk.
Yeah.
So I think there's one thing which is sort of us or other investors writing off their investments. That's kind of like, we'll take the hit. Hopefully we've modelled for that or allowed for it or saw it coming. What we never want to be doing is sort of putting the organisation itself at risk from any investment as well. So, and we've got a good record of that in terms of how we've done so far.
And what's the sort of process for organisations that are maybe more familiar with applying for grant funding, where you submit an application and in most cases they kind of say either yes, here's the money, or no, full stop. Like, is it like that, or is it much more of a kind of relational approach where you look at the business plan and things, and then you go back to them and say, are these figures really realistic, and start to understand a bit more about the rationale?
Yeah, I should say first that we do grant management as well. So hopefully our feedback is a bit better than no. But if you haven't got it, but no, I think there are aspects that are very similar, right? So the amount of money you want, the organisation name, your mission, your purpose, your impact, lots of stuff that you would expect to fill in a grant application. I think there is a bit more back and forth, which is usually about the information, just additional information we might require. And then instead of a sort of grants committee meeting, we obviously have an investment committee. They will meet usually every month or every quarter, depending on the fund. And so there's a bit more of a relationship where a single person will kind of get into the depths of the proposal and recommend that to the investment committee, if you like, and then get asked questions by that committee about it. And sometimes the organisation itself comes to those as well. But it's not dissimilar. I think it is definitely, you're right, it's a bit more relational, it's a bit more involved. I think what we're trying to do is try and make it as clear and as rapid as well, as responsive as some of the best grant making can be as well. Because I think the worst thing for organisations, particularly in the environment we're in and have been in, is waiting around. Almost a quick no is almost better than a long drawn out maybe. And I think so we tried very hard, particularly during COVID, to turn around sort of from application to money hitting the account almost within a month. Now we don't always hit that, and sometimes that's on the organisation as well to get us information, but trying to think about how we can be as responsive as we can in that process is important to us, and also proportionate. So equally, if you're doing a £5,000 grant, in our opinion, you shouldn't be asking for the same amount of information as if you're doing a £100,000 loan. And if you are, then something's a bit wrong.
Yeah, I think there are a few funders out there that need to hear that message a few more times. Yeah.
I could not possibly comment, Alex, but yeah, no, it is frustrating. Sometimes we've been asked to do as much monitoring for a £5,000 grant as for a £1.5 million loan, and that doesn't feel right. Even both for public money in a sense, but actually, yeah, we've got to get that right. So we try and do our best on that, and we don't ask We don't ask any of our investees to create more impact stuff either. Because I think, again, if you end up with 3 or 4 different funds and investors and they're all asking for different stuff on impacts, you're putting this burden on organizations to do things. We just say, look, if you've got stuff, let's have a look at it. Give us what you've got already. And we might have feedback on it, we might have thoughts on it, but we're not going to ask you to sort of jump through a whole load more additional hoops for us or specific questions for us as well.
Yeah, I think it's an interesting sort of challenge, isn't it, across both social investment and sort of grant funding and philanthropy. And I think what it boils down to is who is expected to kind of do the legwork in analysing the information. And I think traditionally often the approach has been to say to the applicant or the grantee or in your case the kind of investee, you work out how to present this data to all these different kind of organisations with these different requirements, whereas actually it could be the other way around, in that organisation presents one set of data, and then if as a funder you have different requirements, then you need to kind of pick it apart and put it into your boxes and things like that. And there's the same on the sort of application side of it as well, which hopefully we're starting to see some of that shift.
I think so. I mean, I don't think we're ever going to get to a point where we've all got sort of one application form or anything like that. And sometimes there's good reason for some of the questions we ask. We're running a big grant fund for government called the Youth Investment Fund at the moment. Now that is incredibly complicated. Some of the grants can be as much as £10 million. There's buildings involved. There's long leases. There's quite a lot of complexity. And there's good reason why some of what we're asking is really detailed and in depth, and you have lots of attachments. But equally, in other cases, we should just be doing stuff much more quickly, much more smoothly, much more streamlined, and really only collecting the information that we're actually going to use. I think that's the critical bit for us. If no one at our place is actually going to use it to assess or to report or to monitor or to inform our work, then really why are we collecting it? So I think it's that sense of you've got to have a rationale behind why you're collecting it and what you're going to do with it, because otherwise there's no need.
Yeah, and I think you've mentioned before about using data to improve the way you work and improve transparency and things. Can you tell us a bit about the work you've been doing there around how you use data?
Yeah, sure. I mean, I arrived in 2018 and we'd had this long track record. So I was like, we must have amazing data on everything we've done over that time. And we did not have amazing data, I think it's fair to say. So it was sort of either buried literally in garages, in boxes, or it was buried electronically in archives as PDFs. And so the team, particularly under my deputy, Jen Maitland-Hudson, worked incredibly hard to get all that information together to be able to analyse it, both so looking back, first of all, and really understanding and looking at all the accounts of all the organisations we'd invested in. Again, to your point, the burden on us to do the analysis. And now starting to really be able to use that information in a live way on our new funds and programs and initiatives. We're also really keen on reporting that transparently. So on our funds, we tend to have live dashboards and people can see who's applying, what's in the pipeline, how much is flowing through, what geographical areas they are. Again, because I think just a lot of our world tended to be a bit behind the scenes and was a bit sort of mysterious, and it really isn't that mysterious. It's fine. And I think we're quite passionate about sharing that information in the sense that we think it helps all of us. It helps the investee who might be interested in our funds. It helps other funds in our landscape know what's going on. And it helps us get better often if we can spot, which groups are we not managing to reach, or that proportion of applicants are coming in, but none of them are progressing towards an investment committee. Why is that? So using that data, we can start to get better ourselves as well. And we've been, I think, doing that more successfully over the last 2 or 3 years, particularly. Yeah,
and you mentioned about the kind of gap in particularly Black and minority-led organisations accessing funding. So I know, for example, with that, where you've found from the data that that's an issue, then think you mentioned it's usually working in partnership with organisations that are already in that space. What are some of the sort of things that you've done with those partners that are, trying to kind of address that issue?
Yeah, no, you're right. I mean, so we did a guarantee-backed fund in COVID, and that was very successful on one level, sort of 80 organisations, 30 million out the door. I don't know, one analysis said sort of 10,000 jobs secured, which was great. But one thing we did notice was that although about 24% of the applicants were Black and minority led, only 12% of those were eligible. And then only about 4% actually made it to investment committee. Now, all that did make it to investment committee got approved, but we were like, well, that's not proportionate either to the population or to the number of organizations. So in its successor fund, which is the one we're running now, we lowered the threshold for turnover, so allowing for those smaller organizations to apply. And then we put in some of the support I mentioned earlier with working with the Ubele initiative and with Create Equity, and being able to put grant alongside loan so that we can get more of those organizations in, make the money more accessible to them, and make it fit where they're at in their journey. And that's meant at the moment on that fund, after about 25 investments, over 20% of that fund is now Black and minority led. So yeah, using the data, which didn't look good, we reported it transparently. You can see it in lots of reports. But then doing something with it, translating it into a new way of doing it. And hopefully so far, I mean, it's early days, I'm not over promising, but things are looking better in terms of how we do that. And like you said, it's a mix of design, decision-making, and also the partners we work with as well.
Sure. And what are some of the sort of specifics in terms of the support that people are needing, that organisations are needing? Is it around the sort of financial modelling and business planning? Is it, is the grant funding for them to pay someone to come in and do some of that, or is that something you do with them?
It's a bit of a mix. I mean, but you're definitely right. I mean, I think the things we tend to see is often about financial management and financial information. It isn't that they don't have the capability, it's often that they just don't have the capacity, so they just haven't got the time or someone to help them to get it into the right shape. Sometimes it's about governance, so it might be about strengthening their board, and again, earlier stage organisations, inevitably their governance, their board, their non-execs, the support they have is often less well established. And sometimes it's about their business model a bit more broadly. Usually they have a keen sense of their work and what they do and the impact they're having in the community they're operating in. Like, I don't think we add much to that. And so we've worked both with partners like the ones I mentioned. They can provide support directly. We have business support budgets as well, so sometimes we do that. And then we also run other funds like the Reach Fund for Access, which organizations can get a grant to pay for business support to help them get over the line towards an investment as well. So there's different options out there, but those are the sorts of things we see in terms of what's needed. Either more the kind of market assessment side of it, the financial side of it, or the governance side of it. I'd say are the sort of top three that we're often providing support about. And that's not just Black and minority led organizations. I'd say that's across the board actually, in terms of where we provide support, but also some of the challenges we see in the portfolio that we run.
Yeah, I was thinking a lot of that sounds like small and particularly younger organisation issues rather than necessarily any particular sort of demographic.
Yeah, absolutely. And it's just a function that they've often, in this case, they've often been underinvested in and just at an earlier stage than where they would be otherwise. But yeah, those are and often it comes back to governance. Like a lot of when we see problems in organizations, and these can be very mature organizations as well, often governance is at the root of it when we get into it. But yeah, that's some of the stuff we're trying to provide support alongside the finance, really, and recognizing the money alone is not gonna solve everything.
So I know from your work at Social Enterprise UK previously, and now on the board of Social Value UK, you've been involved in that work in getting the Social Value Act, and then have been involved. You have that kind of familiarity with it. I'd be keen to know sort of what's happening with that, because I've not heard so much about it recently, but I know it's something that was kind of billed as potentially having a big impact for the social sector. So be be great to kind of get a bit of an update on that and how charities and social enterprises are benefiting from it, if they are, to what extent they are, and what they could be doing.
Yeah. I think it's one of those things that, it was always going to take some time. I sort of vividly remember being at Social Enterprise UK in 2012, and the Act had just come into law, and I took a call 2 weeks later from a member who said kind of like, it hasn't changed anything. And I was like, well, it might take a little bit more time. But seriously, I think it does take time. Like, it's a cultural shift for some of the people in commissioning and procurement. It's kind of like you have to literally wait for tenders to come up, otherwise you can't change them. So it was always going to take time. I think it was never going to be a revolution, if you like, but I think it has been a positive evolution of what's been happening. And we've seen, particularly in some local authorities and combined authorities, more forward-thinking practice. So like putting bigger weightings on social value, really thinking about how it relates to their objectives, holding people to account for it in some cases. I think the challenge we've seen is, to some extent, a good thing, if you like, which is it's pushing that agenda within other companies, particularly those who deliver public services. But often those companies are much bigger than the social enterprise and charity. So they might have a social value unit in their bidding team, for example, or whatever it might be. The other side of that is, I think, because of the situation of public finances, really, like a lot of councils and local authorities and commissioning bodies have had to reduce their teams. So much of the sort of outward engagement, understanding what's there locally in the supply chain, potentially what charities and social enterprise do, has gone away a bit. And that's led to more sort of kind of big aggregation of contracts and tenders and less understanding of that kind of local market. So I think we've been pushing both for kind of stronger weighting, stronger accountability, like hold people to account, don't just read the bid and go, oh, they're best, but actually, do they deliver on what they said? But also this sense of like, can you push some of this stuff through supply chains? Can you parcel it up so it is more suitable for charities and social enterprises, which was obviously the ethos of the Act when it came in. I think there's good and bad signs, really. Like, I think we've seen ongoing commitment to the Act from lots of different local authorities. I think centrally it's kind of ebbed and flowed a bit, but there has been progress. I mean, it's not always visible from the outside, but places like the Crown Commercial Service, other kind of the bodies that sort of lead a lot of government procurement are really taking this stuff seriously now. And I'm hopeful we can see more of that in the next few years as some of the stronger legislation and guidance comes in, really.
Yeah, I've seen the sort of social value framework, for how that section is assessed on tenders, and it's pretty dense. And I suppose my experience, because sometimes I help charities to put together tenders, and it always feels like that should be an area where we should be able to score really highly relatively easily, and that's what 10% of the overall score now, so it's not to be sniffed at. But often, as you say, big corporates will have like a social value unit, and they'll have lots of evidence and ready-made answers for each of those different kind of indicators that are on that framework. And when I've worked with charities on tenders, they're really starting from scratch and have no familiarity with this kind of Social Value Act and the framework and those sorts of things. So it feels like it's more of a kind of a challenge than an opportunity when bidding for things.
Yeah, I mean, I think it should be, and I think it is in some places. I mean, there are some councils that are doing 30-40% weighting, and where you're seeing that sort of genuine, substantial commitment to it. I think it's never going to be perfect, because we've been in this situation of I think you do need capacity for the sort of pre-engagement of the market, if you like. That's where the local authority or the commissioner understands what is out there actually, and what they can get. And there just hasn't been enough of that. There hasn't been enough capacity or time for that, really. And so it's been difficult, but I think the fundamental principle of like we should get the maximum value in the round out of our public spending, I think that case is pretty well made now. I think we are into the sort of the gnarly bits of implementation and how we do it really well. And sometimes, I mean, and we don't always want to hear this, but sometimes actually we're not very good at that stuff, like in the charitable and social enterprise sector, and we should be better at it. It's not to say we deserve always to lose to some large faceless corporation, but actually sometimes it is a challenge to us to get better on that stuff. If we can't articulate our social value in a way that aligns with that local authority's objectives, then maybe we should be able to at times. But I think mostly for me, it's just about we can do things within the guidance, within the structure of the legislation that I think will make it work better for the largely smaller organisations in the social sector that should benefit, as you say, from the Act originally.
Yeah, and I guess the other way of it, the benefit is where it's not a charity or social enterprise bidding for the contract, but that there should be a way that they can benefit from that social value element of the contract. So
yeah, absolutely,
it's a corporate entity bidding to deliver a public service, big huge contract, multiple millions, and they have to demonstrate that social value. But have you seen interesting examples of where that's worked well, in that a corporate's going to partner with a charity in the local community to deliver X, Y, and Z benefits? Or I don't know. Have you seen?
Yeah, no, definitely. I remember while I was at Social Enterprise UK, talking to, and it's not an uncontroversial project, but talking to HS2, so there was no social enterprise and charity, to the best of my knowledge, Alex, you may know better, that was going to deliver large parts of HS2 in terms of the infrastructure and the building and the construction. But clearly it was going through a load of local communities. It was going to affect them in different ways. There were also huge opportunities for employment, for apprenticeships, for training, for education, for relationships to schools, et cetera. So yeah, we did quite a lot with them to try and I'll be honest and say I don't exactly know where it's got to since I left, but a lot of work with them on trying to think about how do they engage with different communities along the line. How do they do that in the bigger cities that are doing that? What's their approach on that? How does it relate to their overall objectives, but also to what the community needs are? And try and construct for them really a sensible social value policy that meant it was embedded in everything they were trying to do. And try and use that part of that money at least to support the communities that it was going to affect or impact, sometimes positively, but often not always positively as well. So we've seen ones like that, and then there are others, like my chair, Hazel Blears, works with the Nuclear Decommissioning Authority up in Cumbria, and they also have obviously a profound impact and link to their local community, and she's working really hard with them on how to embed social value within their process of that kind of work of the decommissioning authority as well. So you do see these big major projects. I remember also London 2012 and subsequent Commonwealth Games and other major sporting ones. The transport to the games was provided by 2 social enterprises. There was so all those sort of supply chains of big projects, I think, do provide real opportunities where clearly a social enterprise or charity at the moment at least isn't going to deliver the whole thing. But they can deliver parts of it, and that can be part of the motivation. And still now, if you go to the Olympic site, the Copper Box, I think it's the Copper Box, and the swimming pool are still run by a social enterprise. Bike Works, social enterprise still use their, use that as the foundation for their cycling work and so on. So I think for me, there are really good examples, and we just need to find more of those and weave those in and persuade more big companies it's the right thing to do as well.
Yeah, are there things that smaller charities and social enterprises can do to kind of get in the right position to benefit from those things, or do you think it really needs to be driven by the commissioners and the companies that are tendering for things?
I think it never hurts to try and find a way in to engage with the right people if you can identify the right people within the company. I think also, people like Social Enterprise UK or Social Value UK sometimes can be useful routes to that. So Social Enterprise UK run a thing called the Buy Social Corporate Challenge, which is about corporate spending with social enterprises in their supply chain, basically. So again, get listed on that, get your stuff together, get ready, and they can help you potentially find some opportunities. So there's different routes out there, but I think, yeah, where it's local commissioning, it's much more about the direct engagement, I think. And but for these big opportunities, it's probably, yeah, getting to some of the intermediaries who are working with those companies, I would say, and trying to open up the opportunities that are there. But I do think it's a big area kind of ripe for more work. And it does relate to us on the investment side, because, you know, if we want social organizations to grow, to deliver more, to have good impact, be great employers, etc., you know, well, actually they need to win business. And one big bit of business, because it's often aligned, is public services. And so that's why the commissioning, social value, all of that is of real interest to us, because actually a lot of the organizations we support and invest in are working, you know, they're working in that field and working with different parts of government as well. So the two relate really closely from our perspective.
Great. If the organisation's thinking about social investment, wanting to learn more and think about getting ready to apply for funding potentially, what would you point them towards as being useful sort of resources or websites or organisations? What would be the main ones? We can put the links up on the webpage.
Yeah, I mean, I think aside from us, obviously, so we're at sibgroup.org.uk. I think the main one probably, which pulls together a lot of collective information, is Good Finance. So goodfinance.org.uk, and they've got a range of resources. You can literally put in the amount of money you're looking for, where you are, and a bunch of providers will come up. They've got resources, they've got videos, they've got case studies, a lot of peer-to-peer stuff. So that's probably that. I think that would be probably where I would recommend it. It's a really good first port of call, even if you're just kind of like, I'm thinking about this stuff, or I want to speak to my board about this stuff because we've never done it before. If you're sort of making your first steps, or if you're at the stage where you're like, actually, we need 50, 250, 550 grand for this investment, who can I go to ask for that? So I think that would probably be my first suggestion, really. And they work really collaboratively with all of the other social investors in the landscape, really.
Okay, cool. And final question then, just, is there anything particularly that you want to share with the audience or ask of listeners?
I don't think so particularly. I mean, we've got funds that are open, so I guess if any of this is of interest to your organisation, or you just want to speak to one of our team, then go ahead. I think, you know, keep an eye on what's coming out. We've got a lot from the Youth Investment Fund, from the Recovery Loan Fund, from the Reach Fund, from lots of other funds. But I think the main message from my perspective would be to pick what's right for you, to really think it through, and just to consider it as one of the other ways you can use to help maximize and grow the impact of your organization. And it's not right for everyone. It's not right for everyone at this stage of wherever they're at, but I think it can be part of the answer for lots of organizations, depending on how they use it.
Yeah, great. Thank you. Well, it's been really interesting to get a bit of an update on the social investment space. As I said, I'll put all of the sort of resources and links and notes up on the webpage. We'll get that shared out with everyone. So thanks, Nick. Thanks for your time. Thanks for coming on.
It was a pleasure. Thanks very much, Alex.
Thank you for listening to the Charity Impact Podcast. Please give us a rating and follow us on your podcast player or on Twitter, LinkedIn or Facebook. And if you think this episode would be of interest to someone in your network, please do share the webpage on social media or by email.